Before December 31st hits, there are a few key moves that can make a six-figure difference on your tax bill and retirement strategy. If you're a high-income professional or a retiree with significant assets, this time of year is not just about the holidays. It's about making smart moves that can have an impact this year and going forward. I'm Antwone Harris. I'm a certified financial planner, and today I'm sharing 5 things that every high net worth investor should consider before the end of the year. The first thing, we want to harvest gains and losses strategically. So we need to look through your taxable portfolio to see if there's an opportunity to book some losses. Those losses can be used to offset ordinary income or capital gain. And if you have a significant loss, you can use that into perpetuity going forward until that loss is used up. The next thing, if you're charitably inclined, do not give cash to charities. I repeat, do not give cash to charities. We want to look for appreciated stock that may have significant capital gains and give that to the charity so that you can avoid paying those capital gains taxes to a charity that you're already inclined to fund anyway. Third, you want to look for opportunities to maximize your retirement contribution. So if you're maxing out the 401k, you want to look at a backdoor roll. If you have an HSA account, a health savings account, you want to make sure that you funded that account before the end of the year. It's the only account where you get a tax deduction for contributions. The money grows tax deferred, and you're able to pull that money out tax-free for healthcare expenses. If you have the opportunity to contribute, you want to make sure you're taking advantage of that. If you're in a lower income tax bracket this year because you recently retired, or if we get a significant market pullback before the end of the year, that may be a prime opportunity for a Roth conversion. You want to convert those shares. Ideally, we will convert them at lower levels. That money gets in a Roth. That money grows, hopefully, to the moon. You pull that money out tax-free later in life. Fifth, you want to make sure that you're taking a look at that portfolio and rebalancing it. We've had a nice year so far this year. Your stock may have become disproportionate to your target. You may be exposed to more risk than you're willing to accept. So you need to take the opportunity to rebalance everything. Also, within some of the index funds that you have, some of the main stocks in those index funds have run up dramatically and now comprise the majority of some of these indices. So you want to look at that, quantify the risk, see how to mitigate some of that risk, and make sure that as we enter 2026, that you're primed for the right exposure, and make sure as we enter 2026 that your portfolio reflects the type of risk that you're willing to accept. If you need help with this, please reach out to me. This is Antwone Harris with Platinum Bridge Wealth Strategies, and I'll talk to you soon.